fellow traders. 'Tis I, the Rumpled One, coming to you on Friday, July the 11th. The year's 2025. Let's talk trading. Time for the weekly wrap-up. And Walmall is joining us today. These videos are for educational purposes only. Your results may differ from mine and Walmall's. And as always, have your risk management in place. Never lose more than you're willing to lose on any one single trade or during any one single trading session. So Walmart, we'll take a look at the week. The dashboard says all the open gaps have filled, and the pound is 163 pips below the weekly open, 173 off the high, and only 3 off the low. Looks like it came crashing down. For the month,
you say that.
Yeah, for the month, 240 below the open, 305 off the high, and 2 pips off the low. And for the daily, we broke out of the opening range for the week at the 35.75 level, which is a psychological level, and we are 93 pips below the weekly opening range. We also broke through Tuesday's low, and it looks like we are heading down towards the that big, we could almost call it a return bar on the daily from last month, which the open price is 133.98. So looks like we might see 134 area, 00 area sometime soon. For the year, we are 974 pips above the yearly open, 304 off the high, and 1385 off the low. And in fact, we've almost covered the monthly candle, the previous month's candle. We had an inside bar 2 days ago. We opened above it. That low was 35.64, and we're 75 pips below that. So these horizontal line trades would have definitely paid off today. For the range, we have 104 pips. Let's see, it looks like the Swiss yen's leading the pack with 179 pips. It looks like dollar yen's on a tear. It's up to 147.45. I remember it was just a few days ago, it was in the 144s. That's one of those I kicked myself. Should have taken a long trade. Let's see, we are definitely below the daily open. Went through that by the sell zone there, even though I call the whole thing the buy zone. But should have named it trade zone, but I didn't. And we're definitely in the rat zone. All the biases say to short, so we're in the green rat zone. So be careful if you're looking for a long to come out of there. Bambino Flex indicator said to go long. Let's see, the pivot trading plan said near the pivot point was a short, and definitely if we took a short at the pivot, we'd be up. We're now right around S2. We actually dropped below it. S2 is at 34.91. And so if the bias is long near S1, the bias is definitely long near S2. Let's see, looks like we don't have any more missed pivots for July. We're about to take out a missed pivot that happened back in June. So if we take out the 34.76 missed pivot, that leaves 1, 2, 3, 4, 5 missed pivots this year. Where are they? Oh, they're all lower. So we'd have to drop another 1,000 pips to take out all these missed pivots. What do you think, Walmart? Will we do it?
Probably, but not tomorrow.
Yeah, tomorrow the market's closed.
Exactly.
Well, let's see. It looks like yesterday was nothing but wick zone because it looks like we had a doji open 35.80, closed 35.80. The difference was 1 point. So
That's a doji.
that's pretty much a doji there because the the wick zone was like one big blob. Like now I know why.
Yep.
And we definitely broke out of yesterday's low at 35.33. So for the week, only 176 pips in range so far. So we're going to be at the 16th percentile, which was the same range as 4 weeks ago. Isn't that interesting? High minus
As
previous.
curiosity,
Yeah.
how many candles are you looking at for that 16%?
Oh, just 12.
Oh, okay. All right.
Yeah, just
Because
basically 3 months.
yeah, I'm looking at, what, 300 candles, and that puts us at 32%. That's why I was
Yeah.
curious.
Yeah, I just look at the last 3 months just to get an idea where we
Yeah.
are. High minus previous high, we did not break it. Previous low minus low, right now by 82 pips on the week. High minus close 168 for the red rats, and close minus low 8 for the green rats. Weekly crossover traders high minus open was only 10 pips. Open minus low is 167 and counting. You know, that big bar 2 weeks ago was an outside bar. I wonder if we're going to get down and break out of the low.
Yeah, that'd be interesting.
Yeah. So, simple price action chart. If we look at M30, you can see we're coming back to the previous M30 candle low here. Notice that previous M30 was an outside bar. So you got the outside bar break. Usually there's always big action off of the outside bars. Even we can look back here. Last time there was an outside bar was earlier today. And you can see here we broke that low and huge move. Let's see, looking at the lower high, higher low trade, we got a trigger off of that 3 ball on the bottom. If you took that trade, you could have probably made about 5 pips when you saw that 2 ball come out, possibly. And we had a higher low here at 34.95. Could have taken that trade and ridden it for about 10, 12 pips. Let's go and take a look here. Oh, I'm looking at the last 5 closes. Looks like we're ranging here between the two. Hey, Walmart, you want to tell the traders how you've been slaughtering the market? I've been kind of bragging about you, but I haven't told them what you've been doing.
I made a lot of pips this week.
He's being
But,
humble, but I'm not going to tell how many. But he's being
yeah,
humble.
yeah, I made yeah, as they say, I laid a ton of bricks,
Yeah,
as we used to say in the old days. But
yeah. When you were
it's just,
stacking bricks, yeah, $100 bills,
yeah,
yeah,
and but it just, keeping true to, you know, uh, making sure I'm taking the trades I'm supposed to be taking, and when there's a situation where you need to admit that you're wrong, we talked about it last week on a video, where you have to sometimes just admit, hey, this is a loser, take the loss, and frees up the capital, which means you can go and take the next trade, and you just have to be willing to go and you know be humble enough, I guess, to say, hey, I messed up. The market didn't do what I thought the market was going to do, and move on and be good. I mean, today was a very good day for me. Today made a ton of pips, and thing is, I wanted to make that ton of pips, so I actually wound up taking 19 trades. I got started really early and started popping off trades, and just taking them. And the good thing about it was I only have one loss for the day. So today was I can't pat myself on the back for that because that's just the market. The market went and gave me a good wink, as they say.
yeah, yeah. So looking at the range here for the year, calculated range, we've got 1689 pips. Let's see, where are we on the ATR percent? We're at 67. We still got almost 3 trading days left. I think we got, what, 14 trading days left? So we might be able to push that ATR. I'm not sure. It is summer.
Yeah, and that's the thing. In summer things are just not, you know, not they don't trade the way they do the rest of the year. You just got to be very careful about that. And know that because the reason why is because there's just a lot of institutional traders away from their desk. Not that everybody's away, but there's just a bunch of them that are away. And so what can happen is because of that, when everybody's there, everybody's got different opinions, and things get uh, kind of muted a little bit because Charlie's opinion and Johnny's opinion and Susie's opinion are all different, and but they come together and they coalesce together and move the market more smoothly. Well, the problem with the summertime is you wind up with things where a lot of these days are only 75, 80 pips, but the problem is in that 75 or 80 pips, because you don't have all the players out there, when Johnny decides to make a move, it's going to cause the market to move more erratically than it normally does. You just have to be aware of that and know that that can happen.
Yeah. And so for the year, if you bought the yearly open and held, you'd be up 7.82%, which is down because at one time in June, I remember it was above 10. So sometimes it's just better just take your money off the table and go home. Okay, so let's zoom out looking at the month. Prices between the wick zones, seller strong control. We definitely cross below the pivot. What's interesting though, we have a higher high, higher low, but we got a big red candle, what I like to call a sucker bar. Okay, on the week, we broke below the lower wick zone here. Seller strong control, prices turning down. 158 pips below that weekly open. We're below the previous mid and the pivot point. Funny thing is, we wanted to fade the pivot buy to get to 136.64, and we missed that weekly pivot by about 57 pips. I don't know if I went through those charts here. I don't. We looked at the daily. Yeah, we missed that weekly by 6 pips, but we have taken out the monthly. So and let's drop down to the daily. Once again, we're right around S2, below the lower wick zone of the previous day. Sellers strong control. We got a lower high, lower low. So we got a red bar there below the daily open. So that's about it. Walmall, I had a trader. He's contacting me, and he doesn't seem to want to understand that indicators don't make money. Traders make money, and it I kind of feel for the guy, but maybe he is getting a clue. He says, where can he learn properly how to trade? It's like, well, you can watch our our videos here, and just get the nonsense out of your head that some EA or indicator is going to make you a lot of money, because
No.
it's just not.
And I think we all go through that period of learning. We all think that I'm going to have this magical indicator that's going to make me money. Nope. All the indicators do is they help you in your decision making, but they can't make the decision for you. And the quicker you get used to that, the better off you be.
Yeah.
And I've got several indicators on my chart. Why? Because then I don't have to do the calculation. I can sit there and see. Like I've got the EMA 5 on my chart.